Welcome. In this video, how many XCN do you need to become a millionaire? We will analyze this. Don't forget to subscribe, like, and please watch till the end to understand.
But first, let's analyze the XCN.
When we talk about a major descending trend structure, we are actually referring to a very strong and long-lasting pressure in the markets. Such structures shape the overall perception of investors and significantly direct price movements. The size of a descending trend indicates that prices have been under downward pressure for a long period of time, leaving deep effects on investor psychology. The longer the decline continues, the more intense the hopelessness and pressure on investors become. This type of structure creates an invisible yet powerful wall against every buyer who wants to push prices upward. That's why breaking major descending trends is considered one of the most critical turning points in the markets. When the price breaks this trend, it carries not only technical significance, but also very positive psychological and fundamental signals. When the price stays within a descending trend for a long time, this trend line becomes an area where sellers gain strength and buyers retreat whenever it's tested. In the minds of investors, this line is coded as a selling point. Whenever the price approaches this line, those holding assets tend to sell, while those who want to take new positions act cautiously. This constant behavior results in continued pressure on prices. However, there is a very important principle in technical analysis. Every resistance that gets tested repeatedly weakens over time. When a major descending trend is tested multiple times, eventually buyers become more determined while sellers start to lose patience. This prepares the ground for a breakout. Therefore, when the price breaks such a major descending trend, it signals that the pressure in the market has reversed and a new era may be beginning. When a major descending trend is broken, it's not just about a short-term rise. Because the trend itself is big and long-term, its breakout can be a sign of a long-term transformation. This indicates that investors are no longer thinking in terms of decline, but have shifted to an expectation of growth. Psychologically, this is a very powerful shift. Once people's perception changes, behavior patterns in the market are completely transformed. Investors who once saw every rally as a selling opportunity begin to see every pullback as a buying opportunity. This shift allows prices to move upward much more easily. Breaking a major descending trend also acts as a confirmation signal in technical analysis. Once the trend is broken, a clear signal appears before the eyes of investors, prompting many to enter buying positions. From a technical perspective, breakouts of major descending trends usually occur with an increase in volume. This is crucial because the bigger the trend, the more strength is required to break it. Rising volume proves the presence of new buyers in the market and shows that the breakout is not false, but a genuine reversal. If the price breaks the trend but volume remains low, the breakout may not be sustainable and the price could fall back into the trend. However, when the breakout happens with strong volume, it reveals that large players, the powerful investors, are now supporting the upward move. This often marks the beginning of a long-term uptrend. When a major descending trend is broken, it often triggers a psychological chain reaction, like a domino effect. Investors who previously sold at the trend line start closing their positions once the price breaks above it, creating extra buying pressure. At the same time, those who were waiting on the sidelines enter the market saying the downtrend is over, the uptrend has begun. These two factors combined often cause prices to rise rapidly after the breakout. That's why the break of a major descending trend is not just the crossing of a technical line, but also the herald of a new upward wave in the market. The optimism that comes with breaking a major descending trend is usually supported by the underlying fundamentals of the market. The factors that had pushed prices down for a long time may have started to lose their effect. Economic developments, news flow, investor interest, or changing expectations about the potential of the asset could be at play. This shift manifests in technical charts, and when combined with the breakout of a major descending trend, it generates strong upward momentum. When technical and fundamental factors align in this way, it boosts investor confidence and makes the rally much more sustainable. Another key point to pay attention to when a major descending trend is broken is the retest movement that often follows. Many times after breaking the trend line, the price comes back to test it. This test is very important in the eyes of investors because it confirms that the trend line has now turned from resistance into support. If the price bounces upward from this retest, it provides strong confirmation that the breakout is valid. This in turn draws more investors into the market and accelerates the rise. The rally can continue without a retest as well, but when a retest does happen, it usually gives investors extra confidence. From a psychological perspective, breaking a major descending trend means opening a new chapter in the minds of investors. A market that had long been under pressure suddenly gains its freedom with the breakout. Investors are no longer acting out of fear of decline, but are driven by the excitement of capturing profit opportunities. This injects fresh energy into the market and supports upward momentum. As investor confidence grows, market liquidity also increases. This increase in liquidity allows prices to climb more quickly and strongly. In many past examples, the breakout of major descending trends has marked the beginning of new bull markets. Whether in crypto, stocks, or commodities, such breakouts have often been followed by powerful rallies. After a long period of decline, the breakout represents a change in direction and brings new opportunities for investors. These opportunities often signal long-term trends. Therefore, when a major descending trend is broken, investors should see it not just as a short-term rally, but as the start of a long-term transformation. In conclusion, a major descending trend is a powerful line that exerts pressure on the market and shapes investor psychology. But when the price breaks this trend, it signals the beginning of a new era in the market. This breakout carries positive signals technically, psychologically, and fundamentally. With the breakout, buyers gain strength, sellers weaken, market perception shifts, and upward price movements become much easier. When volume expansion, retest confirmation, and psychological shifts come together, the breakout of a major descending trend is like a market breaking free of its chains and moving upward freely. That's why the breaking of such a trend is not just a technical detail for investors, but a powerful source of hope for the future, and the beginning of an uptrend. But we can't base our analysis only on trends. Let's also take a look at other metrics. Stay tuned.
The price moving within an ascending channel is considered a very positive signal in technical analysis, as this structure clearly shows both the direction of the trend and the step-by-step progression of the price. Ascending channels usually indicate that buyers are in control of the market, and they are formed as the price advances by making higher lows and higher highs. This suggests that buying interest consistently persists in the market, and that buyers step back in after every pullback. The lower boundary of the channel is generally seen as strong support. The middle boundary represents interim resistance and target levels, while the upper boundary is considered the key resistance area. The most important point to watch here is the price moving healthily within this channel, especially breaking above the middle boundary. This is because a break above the middle boundary signals that the upward momentum is accelerating and that a strong rally toward the upper boundary could begin. In this context, once the price moves above the middle boundary and turns upward, we could see significant gains depending on the channel's width and the speed of price action. When the price moves above the middle boundary and heads toward the upper boundary, it represents not only a technical possibility, but also a psychological threshold. Since most investors will have already identified this channel structure, breaking the middle boundary creates additional confidence in the market. Buyers become more aggressive, trading volume increases, and new investors open positions, all of which make it easier for the price to climb more rapidly toward the upper boundary. The momentum generated at this point supports the price reaching the top of the channel. If, for example, the upper boundary corresponds to around $1, this level is not only a technical target, but also a psychological barrier. Levels like $1, being round numbers, carry much greater significance in the minds of investors. They usually attract heavy attention, acting both as strong targets and as areas where profit-taking is likely to occur. Price movements within an ascending channel usually progress step by step. Even if small pullbacks occur after the middle boundary is broken, buyers step in again, and the upward move continues. During this process, the price is supported not only by technical indicators, but also by overall market sentiment. If investors increase their confidence in this channel's uptrend, then a move toward the $1 target becomes almost inevitable. The key factor here is that the price continues to form higher lows as it climbs. Higher lows are one of the strongest confirmations of trend strength and the buyer's dominance in the market. The structure of the ascending channel essentially provides us with a roadmap. Once the price breaks above the middle boundary and turns upward, the upper line of the channel almost acts like a magnet pulling the price higher. During this process, investors' eyes remained fixed on the upper boundary, around $1. This is because in technical analysis, the price often tends to move all the way to the boundaries of such channel structures. Therefore, after breaking above the middle boundary, most investors set their positions with the $1 target in mind. This target also creates an expectation in the market, and that expectation itself makes it easier for the price to actually reach the level. Expectations and psychology can be just as influential in price action as technical indicators. The possibility of the price rising to $1 within an ascending channel is not only a technical scenario, but also an indication of a strengthening sense of confidence in the market. Once the middle boundary is broken, fresh capital enters the market, trading volumes rise, and investors aggressively buy with the goal of reaching higher levels. This drives the price upward more quickly. In these kinds of channel moves, while touching the upper boundary often marks a point of profit taking, the possibility of breaking it and climbing even further always exists. This is because in strong trends, the price often exceeds even its technical targets. The $1 level in particular is a symbolic target for investors, and reaching it generates significant excitement in the market. Such psychological levels are seen as turning points in the eyes of investors.
The goal of becoming a millionaire is one of the biggest dreams for many people investing in the cryptocurrency market. The key point here is determining the target price, figuring out how many coins need to be purchased to reach that target, and calculating the total cost of that investment at the current price. Let's take a closer look at this scenario. First, we set a target of $1 million. This is the amount an investor wants to see in their portfolio. If we assume that the coin called XCN could reach a future target price of $1, then we divide $1 million by that price. So $1 million divided by $1 equals 1 million coins. This calculation shows us that in order to reach a net worth of $1 million, an investor would need to hold exactly 1 million XCN if the price reached $1. At this point, we can take the calculation a step further to determine how much it would cost to buy 1 million XCN at today's price. The current price is given as $0.012. Therefore, the calculation to buy 1 million XCN at today's price is as follows. 1 million times 0.012 equals $12,000. In other words, by investing $12,000 today, an investor would acquire 1 million XCN. If the price were to rise to $1 in the future, this investment would be worth $1 million. Put differently, with just a $12,000 investment, they're in a chance of becoming a millionaire. This is one of the most striking and attention-grabbing opportunities that the cryptocurrency market offers, because in traditional markets, it is almost impossible to achieve such a return in such a short period of time. The main point to keep in mind is that the cryptocurrency market carries as much risk as it does potential reward. The possibility of turning $12,000 into $1 million is an incredible source of attraction for investors. These kinds of calculations increase investor motivation, but they also require a realistic perspective. For the price to really reach $1, market conditions, supply and demand dynamics, investor interest, the project's development process, and general market trends would all need to support this goal. From a theoretical standpoint, however, the picture is clear and simple. It takes only $12,000 today to acquire 1 million XCN. If this investment reaches $1 per coin in the future, it would represent an 83x increase. In other words, for every $1 invested, the return would be $83, an extraordinary scenario. Returns like this are usually considered exceptional in the investment world, and they are most commonly seen in cryptocurrencies. That's because the crypto market is highly volatile, meaning prices can rise and fall very quickly. This volatility brings with it not only big risks, but also big opportunities. Turning $12,000 into $1 million also has a strong psychological effect on investors. These kinds of calculations help investors build a long-term vision. In other words, instead of selling their XCN during small price movements, they may choose to wait for the $1 target, because when that target is reached, the profit will be far greater than any gains from small fluctuations along the way. This perspective encourages patience and long-term thinking. In the crypto market, patience is one of the greatest virtues, as major price surges often come after long periods of accumulation. Another point worth mentioning is the psychological sense of security that holding 1 million XCN can provide. With such a large number of coins, even small price increases can significantly impact a portfolio's value. For example, if the price rises from $0.012 to $0.020, the portfolio's value increases from $12,000 to $20,000. Even small movements create major effects. This motivates investors and strengthens their belief that bigger profits may be ahead. Reaching $1 would then be the ultimate peak of this story. It's also important to note that while a $1 price target may seem unrealistic to some, it may seem perfectly achievable to others. In the past, many coins that traded at just a few cents later reached several dollars, giving investors hundreds or even thousands times their initial investment. From this perspective, XCN could potentially follow a similar path. The key question is whether investors believe in this target and whether they can hold on to their coins until then. From an investor's perspective, a $12,000 investment is a medium-sized amount. For some, it's very accessible, while for others it may be too risky. But since the target points to a massive $1 million return, the risk may seem worth taking. Even if $12,000 were lost, the potential reward is so much greater that the risk-to-reward ratio still favors the investor. In fact, this scenario is one of the clearest examples of the high-risk, high-reward principle in investing. This type of calculation can also inspire investors to diversify their portfolios. For example, someone could invest not only in XCN, but also in a few other coins with similar potential, thereby spreading their risk. That way, even if one coin doesn't reach the target, gains from others could still help achieve the millionaire goal. But specifically with XCN, the possibility of turning $12,000 into $1 million is the strongest motivator. In summary, an investor with a $1 million target who believes XCN will eventually reach $1 knows they need 1 million coins. At today's price, that requires just $12,000. If the price does reach $1, the investor becomes a millionaire. This means a $12,000 investment could open the door to millionaire status. The calculation is mathematically simple and highlights the unique opportunities of the cryptocurrency market. Of course, whether or not this scenario plays out depends on market conditions, investor interest, and the project's success. But the millionaire dream is shaped and fueled by exactly these types of calculations.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.